When a company stock runs up into an earnings report, any company stock, the outcome for its share price is rarely a good one, especially when the results themselves aren't absolutely perfect. Consider longtime Cramer fave Popeyes Louisiana Kitchen, PLKI, the exceedingly well-run chicken chain with 2,379 locations across the U.S., 26 foreign countries. Popeyes reported after the close on Wednesday, but in the week leading up to the quarter, its stock had rallied from $61 all the way up to $66, in part because investors expected the company would make some sort of announcement about adding more leverage to its capital structure. What happened? Well, Popeyes delivered in-line earnings and terrific same-store sales, eye-popping, up about 10%. But there were still some people expecting even more than that and a huge guide-up. The biggest bulls on Popeyes didn't get what they wanted, so the stock got slammed, falling 9% from 66 back to 60 and change. My view? Hey, listen, I'm wondering if you could be getting a fabulous buying opportunity for the first time in a stock that's been going up virtually in a straight line for ages. Popeyes has given us a nice 17% gain since the last time we spoke to the CEO mid-November. It's up an amazing 50% from our previous interview just last August. So should we be worried about Popeyes, or should we be worried about missing this entry point? Let's check in with Cheryl Bachelder, the CEO of Popeyes Louisiana Kitchen, and one of my bankable 21 chief executives from Get Rich Carefully to hear more about the quarter and our company's prospects. Ms. Bachelder, welcome back.
Thank you, Cheryl.
Have a seat, Cheryl. It's always great when I see you in person. Well, both you and I are kind of puzzled because we know the stock ran up, and we know that the same-store sales were about the best in the not just in the chicken industry, which you always exceed, but in all of same-store salesdom.
That's right.
So, I mean, maybe this is was one of the things where, like, people just said, you know what, there's no way you can continue to deliver, because you did say, listen, you know, it may not be like this all the time.
Well, just as you said, we've had such a good run. What we're proudest of is we have sustainable, quarter-to-quarter, reliable performance, you know. And over time, the market gets it right with our stock. So, you know, a day, no problem.
Well, let's talk about the longer term, since that obviously did not concern the people who sold your stock. You have a great deck, which tell us a lot about what's going on. Established domestic footprint with opportunity to double, over 20% of the system less than 5 years old. I see lots of places with not a single dot, meaning not a single Louisiana Popeyes kitchen. So I imagine that you've got, this is multiple years.
Yes, it is, multiple years. I've talked about the opportunity to double the size of the chain in the U.S., and then you add the international expansion,
I
which
wanted
is
to do that,
just
too, because
the world.
I mean, I was looking at, you know, I was talking to Patty Doyle from Domino's the other day, and I know you know Yum, of course. I mean, there are places where they have 100 restaurants that you have none.
That's correct. Lots of opportunity. I was excited yesterday to talk about the international opportunity because we've been quietly building a reputation and an approach to our brand internationally. We've got it working really well. And I think we have an exciting opportunity there really to implement the same strategies we've done in the U.S., invest in our brand, invest in running great restaurants, and making good returns for our owners. And as you know, that's when they build a lot more restaurants.
Well, let's talk about that, because owners, franchisees, they could really be with any chain.
That's right.
Why do they choose you?
Well, it's very simple. It's kind of like you, Jim. It's the returns, right? It's the returns. Are there good unit economics in your model and a good investment return to them? They're just like every other investor. They're trying to raise their families and make good returns and good investments. So I think our ultimate responsibility to our franchisee is to measure our success by those same parameters that they measure theirs, the unit economics and the returns on investment.
There have been some restaurants that chains that have forgotten how important their franchisees are. You hold them up at a level that most CEOs in the food business don't talk about.
Yeah, we talk about our franchisees as our #1 priority customer, and we say that listening to them is our #1 responsibility because they have invested all the capital in the assets, they've hired all the people and trained them, they've put it all on the line. And we believe, and I think we've demonstrated, that when we serve them well, our shareholders benefit.
And you serve them well in part by doing some amazing promotions, which get people in. National advertising that has been hugely successful. Affiliation with some sports games that actually work gigantically for you.
We had a great Bahamas Bowl this year. It was really exciting, and in fact, nominated for an ESPY. It's just had all kinds of exciting press. But, you know, we're becoming a big brand, Jim, and we're starting to get the presence and reputation that our food and our people deserve. So it is a very exciting time. We had 7 new product innovations last year that I know you love.
Yes, I do.
We're always bringing them to you.
Everyone knows I love it. It's what I really eat. That's when I first met you. I said, listen, I want you to come on the show because I've been a huge customer for years. I love it. Now, you also have a book out, which I think is terrific, Dare to Serve. And one of the things that I thought was laced throughout your presentations is the notion of serving, kind of a Danny Meyer approach to things. How do you get people in a disparate worldwide chain to focus on serving the way that you like them to?
Well, I think the different take I have on serving is that serving creates the environment for superior performance. Most people think serving is weak-kneed or being a doormat, and it's not that at all. It's the most aspirational thing you can do, is try to do well by the people you lead. And so at Popeyes, that's our franchisees. We've done well by them, and it's yielded performance results at the top of our industry. The other thing we've done is the dare. We've done bold things. We've done some real step-forward things like investing in media, innovating in new products, and we've created the business plan and the culture of serving them that's yielded this performance.
There were some people I said were disappointed, and the chatter was, well, we were hoping she would do an even bigger buyback. You did buy millions of dollars worth of stock this time. I'm torn on this, I got to tell you, Cheryl, because the people I see, they feel like the stock doesn't have so-called enough liquidity, enough shares. At the same time, you generate a huge amount of capital, like a Domino's, because of your franchise model. What is the best way to return the capital to shareholders?
All right, well, this is, as you say, it's one of the big discussions in our industry with a company that throws off a lot of cash. What I said yesterday, I feel so strongly, the first and best use of our cash is to reinvest in this business and grow it to the strategies we've been successful with. And that is first and foremost what we're going to do. When we have excess cash, we're happy to return it to the shareholder, and we've proven that over a very long period of time.
Well, I want you to keep growing, because you've got among the best growth, but the same-store sales number is spectacular.
Thank you.
Thank you so much to Cheryl Bachelder, the CEO of Popeyes Louisiana Kitchen. Down 10%. It doesn't do that very often. That's when you make your move and buy. After the break, I'll tell you more ways to make some money. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.